80% of our trades are going against those who have been making money. But today's just not the day for that because, like I said, what am I going to long this right here and then I'm going to open my stop up 20 handles? That goes against everything that I stand for in these markets. Okay, literally. Why the hell am I risking almost double my max risk on a Monday just because it's the weekend? Fuck it, I want to do something. We haven't traded in a couple days. No, absolutely not. This is a written out plan. Okay, would you rather be profitable, or would you rather be fueled by excitement and dopamine and daydream about being a successful trader? I think you would rather be profitable, but that devil on your shoulder, kind of drives you to do things that result in unprofitability. Okay, even though you know what you actually need to do, you can't bring yourself to it because you know you have certain things that you need to work on, things you just can't get past. It's an easy world to get distracted. I'll say that. It's very, 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 very easy to get distracted in today's time, and it's up to you if you're gonna block that out or not and really just lock in. Okay, let's see what's going on in ICT land. It's been a while, to be honest.
Because I understand what this thing's doing. And then you want to screenshot that. Okay? So when you're looking at price action,
His volume is quite low.
what in this this is the part that a lot of my students skip over. They don't do any work with this part of it. They ignore it. They assume
Man, his volume is really low. Can you guys hear it?
Have any basis in them, okay? Because they want some kind of gimmicky little 1, 2, 3, get me in the trade. Where's my stop supposed to be? I only want a one-handle stop loss like ICT. I want to be able to do everything perfect right from step one. I don't want to have any adversities.
Man, this really would have been a beautiful entry if it weren't for me having to double my risk.
And you have to,
and I'm not doing it on a Monday. I already told you guys that.
Because that's where it's going to highlight your shortcomings in your understanding, and it's going to also teach you how to overcome it. Because once you identify what you're having an issue with, wouldn't you want to know what your problems are in your relationship? Like if you were married to a new spouse and you genuinely love them, but they haven't been forthright in telling you what your character flaws are that really get under their skin because they don't want to offend you, because they don't want to hurt your feelings. But wouldn't you want them, sincerely, wouldn't you want them?
Okay, well, I mean, to be honest, he's not even talking about the charts, so he's talking about like psychological stuff. So I want to focus in on the charts right now. So we'll come back to that. Obviously, nothing I'm interested in trading right now. However, I gave you guys a bullish bias, and these relative equal highs were tagged. It would be preferred to see us trade above the previous session high in the form of London high here. Okay, that's what I'm anticipating. That's what I'm expecting. Like I said, it's all on a basis of this SMT divergence here. Notice it's a Monday, and we came the whole way down and matched the lows down here. The reason why I'd be bullish off of that is, number one, I mean, we've obviously traded down a lot. Number two, it's not typical for a Monday to take out this key of a low. Now, don't take that to heart and think that it's never going to happen, because it will. But it's more likely on a Monday that we drive down, match that low, and then, maybe Tuesday we consolidate or retrace. And then we drive price down below these relative equal engineered lows, okay? That's what would be preferred. And also, we took out these relative equal daily lows here. Okay, see that? These relative equal lows right there. Swept that for the marketplace. And then if we go down to the 15-minute chart, okay, we had the SMT. Okay, I could take this off because I was ran. We all saw that annotated on my chart beforehand. But anyway, okay, we slept below those relative equal daily lows, came down, obviously worked in the wick here, failed to take the low. Does it yes? Absolutely yes it does. So we have an SMT divergence, and then we form an intermediate term low right here. Swing low here, higher swing low to the right, higher swing low to the left. Now following the intermediate term low, what happens? We displace higher, market structure shift, back down, optimal trade entry into a discount, bullish order block, expanding up off of that, drawing into what? Buy side liquidity. Buy side liquidity. So, everything that I just said, that's my entire narrative as to why I want to see price ramp up. And remember, here's our previous session high. Okay, I didn't have it marked out, but I absolutely brought that to your attention as soon as I booted up this live stream. So we'll label that London High. Now notice I'm not in a hurry to take any trades here. I'm sure other guys are seeing this as a great opportunity to hit the casino, but not me. But anyway, so far everything looking great. Okay. The only thing that didn't look great is me entering this marketplace, because that's just not going to happen if I'm opening myself up to that much risk. Lost my words there. Why is this a picture perfect long? I already told you that. Okay. It's not that hard to see. Look, we come down. We're using this low because this is the second swing within this expansion leg. Okay, we always use the second one. I always use the second one. Okay, it's the most precise. We trade down into what? 62% retracement. Where does this 5-minute candle end up? The body. It ends up above that 62% retracement level. That's signature number 1 within an optimal trade entry. Then we go down, 1-minute time frame. What do we do? Tap down into this old bullish order block. Okay. Create a swing low, move away from that, expand in the favor that we want to see price trade towards. Okay, these highs and these highs up here. And then we come up, trade back down. Accumulation of what? Longs at this specific down close candle. Why is this an order block? Well, we traded down to an optimal trade entry, moved away, created this down close candle, formed an imbalance, and then we trade back down into that. Accumulation of longs. That's where smart money is getting long in a discount. Notice we're in a discount still. So discount, order block, plus fair value gap to a premium buy side liquidity pool right here on a short-term basis. Okay, that's it. And what time is it? 9:36 a.m. Are we within the New York kill zone? Yes, we are. Perfect. There you go. So notice, I said this in the last live stream, I know, but every single time I mention a bullish order block, that's an entry point. There's always a story that I'm telling behind it. And if you can't do that whenever you label something an order block, please do not even use it. Okay? Don't say it's an order block, because it's probably not. But if you can frame a story around it, sit there and just really, really use your brain and think, and see if you can come up with a story surrounding the down close candle. And if you can, chances are, if time aligns, that is a high probability order block. Okay? Now notice this is live price. I said this is a long, and I gave you guys targets to the upside. I said this is engineered highs. Gave you this up here. That's not market replay. That's not, price trading down to it and saying, all right, let's see what happens now, guys. And oh, boom, cash. There's $600. Okay, that's not mentorship. Doing what I'm doing now live, that is absolutely mentorship. And you're learning so much more than any course that you would ever buy. Okay, I promise you that. Notice us trading back down into this 5-minute bullish order block. This is reaccumulation of longs within the range. This should springboard us up in a London high here. New week opening gap to the low. Are we still on a discount? Yes, we are. Would smart money be buying this down close candle realistically, with us being in a discount and us still having yet to engage these highs? On a normal A plus day, yes, absolutely, every single time. So notice how we're working on the heels of the order block there. Boom, there we go. There's the expansion. Look how many times we traded down into it, consolidated. And notice we did not get to this fair value gap. There we go. There's London high pierced. Beautiful. The key takeaway here is notice how we left this fair value gap open. Notice how we didn't even get down into it. We just simply traded to the high of the bullish order block, left this open, expanded up into London high. So we have an order block to a buy side liquidity pool.